Hey listeners, welcome back to the Deep Dive.
Great to be here.
Today we're tearing into the interim financial statements of Sarvodaya Development Finance PLC. You might know them as SDF. This is for the quarter ending June 30th, 2025.
And it's not just a numbers exercise, is it?
Not at all. It's really a fascinating look at a financial institution that explicitly marries its financial performance with a pretty profound social mission.
Right. Rooted in the Sarvodaya Shramadana movement. It's quite unique.
So our goal for you today is simple. Cut through the jargon, pull out the key insights.
Exactly. Give you a clear picture of SDF's recent performance, and maybe more importantly, how their purpose, this focus on inclusive development and empowerment.
How that actually translates into financial results.
Precisely. It's a really compelling case study.
Okay, so let's kick off with a number that just jumps right off the page.
Go on.
A remarkable 35.3% increase in net profit.
Wow.
Yeah, soaring to 128.1 million rupees for the quarter.
That's significant growth for any company.
Absolutely.
Yeah.
It makes you ask, how are they doing it? But, when that company's stated purpose is all about inclusive development, socioeconomic empowerment, and sustainable growth.
It adds another layer, doesn't it? How does that mission fuel the financials?
Exactly. Okay, let's unpack this report.
Right. And the CEO's message, I think, really sets the stage well.
Yeah. What's the gist?
Resilience and clear outperformance, not just on their own terms, but compared to the broader financial sector.
So it suggests their model, this unique blend, is working even when maybe others are finding it tougher.
That's the implication, yes. It
Yeah.
feels like more than just a good quarter.
Well, that net profit figure, ours 128.1 million, that 35.3% jump. It definitely screams strong start for the financial year 2025-26.
No doubt.
And if we dig into the nuts and bolts, like how they got there, gross income shot up 40.7%. That's huge. And net operating income climbed 35.1%.
Okay, so that suggests more than just top-line growth. It points to efficiency.
Right. Operational efficiency, maybe some smart strategic moves paying off. They're converting that revenue into profit effectively.
Exactly. And the strength isn't just on the income side. The balance sheet looks significantly fortified, too.
How so?
Well, total assets expanded by 14.5% just since the last financial year end, March 31st.
Wow. 14.5%. What does that bring the total to?
They're now at 25.8 billion in total assets.
Okay, billion with a B. That's substantial.
And what's really noteworthy is how much of that growth seems tied directly to their core purpose.
You mean the lending?
Precisely. Their net lending portfolio grew by 13.4%.
Okay, and what's the size of that now?
It's sitting at ours, 21.7 billion. So, that's the money actually going out, potentially driving that inclusive
Oh,
development.
right, their bread and butter. And they need funds to support that lending. How are deposits looking?
Deposits grew too, up 3.2%, which is about ours, 313.3 million in new deposits.
Okay.
So total deposits are now at ours, 10.1 billion. They seem to be attracting the funds needed to keep that lending engine going.
Good, good. So the core business looks solid. What about efficiency metrics, stability?
Also compelling. Their annualized return on equity ROE for the quarter, it went up.
Ah, ROE, always a key one.
Yep. Enhanced to 12.8% from 10.5% in the same period last year.
So maybe just remind listeners, what does ROE tell us?
Sure. For you, the listener, ROE is a fantastic indicator of how effectively a company uses shareholder investments to generate profit.
So a higher number is generally better.
Exactly. And an increase like this signals SDF isn't just growing, it's becoming more profitable for its owners with the capital they have.
So growing bigger and growing smarter, perhaps.
You could put it that way. And adding to that sense of financial strength, the report mentions their total capital ratio.
Which is?
Well above regulatory thresholds. That's a quote.
Okay, and why is that important? It sounds like jargon.
Fair enough. It basically means they're keeping a healthy cushion of capital relative to their risks. It's prudent management.
Right, a safety buffer.
Exactly. And for a company focused on community development, that kind of stability is, well, it's crucial for long-term impact, isn't it?
Absolutely. You need that solid foundation. Okay, let's peel back another layer then. The profit or loss statement. This is where we see the engine room, right?
The mechanics of that profit growth.
So interest income, their main revenue driver, up 36.7% to ours, 1,217 million. Healthy.
Very solid.
But here's where, for me, it gets really interesting. Net fee and commission income.
Ah, yes, I saw that.
It exploded.
Yeah.
Ours, 89.2 million, which is up an eye-popping 119.0%.
That is a massive jump.
Right. What do you think that suggests for a company like SDF, especially given their mission? That's not just interest on loans.
That's a fantastic observation. Such a dramatic rise there, it could signal a few things, maybe expansion of digital services, those often carry fees, or perhaps a stronger uptake of services that support their main lending.
Like payment processing or maybe advisory stuff for their SME clients?
Could be. Point is, it diversifies their income away from just relying on interest rate spreads.
Which is generally seen as a healthy sign, right? A more mature business model.
Definitely. And even their other operating income saw a strong increase, 70.1% up to Rs, 20.3 million.
Okay, but growth rarely comes without costs. Where did we see increases on the expense side?
Well, interest expenses were up 53.3% to Rs, 468.3 million.
Which is interesting because that actually outpaced their net interest income growth of 28.1%.
It did. Suggests maybe the cost of funding went up or the structure of their borrowing changed. Also, impairment charges.
That's what they set aside for potential bad loans.
Correct. Those increased by 31.8% to Rs, 119.3 million. Not unexpected, and the loan book grows rapidly, but needs watching.
Sure, and people costs, personnel expenses.
Also up significantly, 54.1% increase, reaching Rs, 249.6 million. Investing in their team, perhaps, or expansion.
So rising costs across the board, really. But despite that,
Their operating profit before tax still jumped, up 22.7% to Rs, 309 million.
which ultimately gets us back to that impressive bottom line. Rs 128.1 million net profit for the period.
Exactly. The growth drivers outweighed the cost increases.
Okay, let's pivot slightly to the financial position again, the snapshot of what they own and owe. We know total assets grew. Any specific areas jumping out?
Yeah, a couple of categories saw quite large shifts. Other financial assets almost doubled.
Doubled. 96.0% increase. What does that typically include?
It can be a mixed bag, maybe short-term investments, liquid holdings. It could signal some strategic balance sheet management, perhaps trying to get better returns on cash.
Okay, what else?
Financial investments grew by 21.2%. And importantly, reinforcing that core business growth, financial assets at amortized cost loans and receivables.
Which is basically the bulk of their loan book.
Right. That increased by 16.8%. So strong underlying growth there.
And on the other side of the balance sheet, liabilities. Anything noteworthy?
Yes, amounts due to banks and other institutions, essentially. Money SDF borrowed from others increased by 31.7%.
So they're taking on more debt themselves to fuel that lending growth.
It looks like it. Leveraging external funding, which suggests confidence in their ability to generate returns from it.
Makes sense. Anything else on liabilities?
Other non-financial liabilities saw a pretty big jump, 54.5%. That could be various things, operational payables, maybe deferred income.
But importantly, what about the shareholders' stake? Their funds.
That also increased, which is reassuring. Total shareholders' funds up 3.2%.
Okay, and what drove that?
Primarily a 12.4% increase in retained earnings, so they're keeping a good chunk of their profits in the business.
Reinvesting for the future, strengthening their equity base. Yeah, that's good to see.
Definitely. Now, if we connect this back to how SDF actually, makes its money day to day.
The segment reporting, where the business actually happens.
Exactly. They break it down into three main segments: lease, loan, and other business. And this breakdown, well, it tells a powerful story.
Let me guess. The loan segment is the star.
Absolutely dominant. Interest income from loans hit $764.7 million this quarter.
Wow. Compared to last year.
That's up from Rs 470.2 million, a huge increase.
And the lease segment.
Also grew, but much more modestly, Rs 409.9 million in income, up from Rs 395.7 million.
So the real engine of growth, and probably their impact too, is clearly in providing those direct loans.
It certainly looks that way. It really seems to reflect that mission of rural-centric agroeconomic transformation you mentioned earlier.
Channeling funds directly to those communities. Makes sense.
And the loan segment obviously contributes the most to the bottom line, too. The segment result was Rs 223.3 million this quarter.
What about the other business segment? You said there were three?
Right. What's interesting there is the turnaround. Last year, Q1, it actually had a negative result, a loss of Rs 56.9 million.
Ouch.
But this quarter, it turned positive, a profit of Rs 17.7 million.
Okay, so those diversified, non-core activities are starting to contribute instead of being a drag. That's another positive sign.
It is, either becoming more efficient or maybe new initiatives are starting to pay off.
Now, just briefly, cash flow. I saw a note about a big change in operating cash flow.
Yes. The cash flow statement shows a much larger use of cash in operating activities in Q1 2025.
How much larger?
Negative LKR 2,065 million compared to negative LKR 604.5 million in Q1 last year.
Okay, for someone not deep in finance, using more cash in operations might sound bad.
It can seem counterintuitive, but for a growing finance company, it often means they're deploying more cash into new loans and advances, which is their core operating activity.
Ah, okay, so it reflects that rapid loan book growth we saw,
Exactly. And importantly, it was largely offset by cash from financing activity.
which jumped significantly.
Massively. From LKR 348.9 million last year to LKR 2,675.1 million this year.
So they're raising substantial funds through debt or equity to fuel that operational expansion. Shows confidence.
Precisely. It paints a picture of active, confident expansion.
Now, switching gears a bit, what's been happening with SDF shares in the market for investors listening?
Well, this is quite fascinating, too. The market performance has been pretty strong.
Tell me more.
Okay, quarter ending June 30th, the last traded price. In 2024-25 Q1, it was LKR 13.80.
And this latest quarter, Q1 2025-26.
LKR 32.70.
Wow, more than doubled.
Significantly up, yes. And the highest price during the quarter went from LKR 14.90 to LKR 34.0. Even the lowest price moved up substantially, from LKR 12.60 to LKR 17.00.
That's not just a small bump. That's a major repricing by the market. What does that imply?
It implies much more positive investor sentiment, recognition perhaps of this performance, and maybe the unique value proposition SDF offers that blend of financial return and social impact.
And speaking of their identity, if you look at who owns the shares,
Yes, the top shareholders list.
Sarvodaya Economic Enterprises Development Services, GT Ltd, is the largest, right? At 36.0%.
Correct.
And that name, it brings us right back to the beginning. This isn't just some random investment fund.
Absolutely not. It's directly tied to the founding vision, Dr. A.T. Ariyaratne, the Sarvodaya Shramadana movement principles.
It really underscores that this company's purpose isn't just, marketing fluff. It's structurally embedded.
It's in their DNA, as you said earlier. Focus on that rural-centric agroeconomic transformation.
So they operate as a public quoted company, a licensed finance company, listed since December 2021.
Right. And their activities are quite diverse within finance. Fixed deposits, savings, leasing, SME loans, gold loans, personal loans, digital services.
And they have the footprint to deliver that with 56 branches.
Which allows them to actually reach into those rural communities, again, tying back to the mission.
And they have a credit rating.
Yes. Lunker Ratings gives them BB Plus with a stable outlook, affirms their financial standing amidst all this growth.
Good to know. And do they mention dividends? Any return for shareholders that way?
They did. A final dividend of ours, 1.25 per share, was declared on June 27th for the previous financial year, 2024-2025.
Okay, tangible returns alongside that share price appreciation. So let's try and wrap this up. If we recap our deep dive into SDF's Q1 2025-26 results, what are the main takeaways?
Well, firstly, it's undeniably strong financial performance.
Yeah, significant profit growth, asset growth, especially in that core lending portfolio.
Right. And signs of improving operational efficiency, even with rising costs.
But the really compelling part, for me at least,
is the dual mission aspect.
Exactly. SDF isn't just another finance company. It's positioning itself as this purpose-driven intermediary.
And these results suggest that strong financial performance can actually be maybe even amplified when it's deeply aligned with those core values, inclusive development, socioeconomic empowerment.
They're making a case that these two things, profit and purpose, aren't opposing forces.
Maybe mutually reinforcing. It's a powerful narrative backed by some strong numbers this quarter.
So what does this all mean for you, our listener? I think, in a world that often seems driven purely by the bottom line, this deep dive into SDF raises a really interesting question, doesn't it?
Which is,
can having a clear, deeply rooted social mission actually be the secret sauce? Not just, doing good, but for achieving exceptional, sustainable financial success.
It's a provocative thought. And SDF's latest numbers certainly give us, and you, plenty to ponder on that front.
Definitely something to think about. Thanks for joining us on The Deep Dive.
My pleasure.